Hello everyone and welcome to our channel. First, let's start with crude oil. Ceasefire talks between the US and Iran have once again reached an impasse after Trump expressed dissatisfaction with Iran's latest proposal. This has weakened hopes for a near-term easing of the conflict. Meantime, the United Arab Emirates announced its withdrawal from OPEC and OPEC+, raising fresh doubts about the unity of the oil-producing alliance and prompting investors to reassess the global crude supply outlook. On Tuesday, international oil prices moved sharply higher. Brent crude futures rose about 2.5% to close at $104.40 per barrel, marking a seventh straight trading day of gains. WTI crude futures climbed about 3% to settle at $99.43 after briefly breaking above the $100 level during the session. For now, concerns over a potential blockade of the Strait of Hormuz remain the key driver behind oil strength, outweighing expectations that the UAE's exit from OPEC+ could eventually increase supply. In the short term, geopolitical risk and supply concerns are likely to keep oil prices supported. Looking further ahead, deeper divisions within OPEC+ and more independent production policies could increase market volatility and bring inflation concerns back into focus. Turning to the foreign exchange market, the Bank of Japan kept its policy rate unchanged at 0.75%, but the vote revealed a clear split, with 3 board members supporting a hike to 1% to address energy-driven inflation risks. This hawkish signal briefly supported the yen. However, Governor Kazuo Ueda struck a cautious tone at the press conference, citing weaker confidence in the economic outlook. The yen then gave back most of its gains, leaving US dollar JPY little changed near 159.65. In the short term, the yen will remain highly sensitive to the US-Japan interest rate gap. While hawkish voices within the Bank of Japan are growing stronger, the yen may stay under pressure if Ueda keeps a gradual approach to rate hikes and the Fed remains firm on inflation. Looking ahead, market focus now shifts to Wednesday's Federal Reserve meeting. With energy prices rising and inflation risks returning, the Fed is unlikely to send a strong easing signal for now. That's all for this episode. We'll see you next time.